Testing. Here we go. I think we're live. 3, 2, 1. Says it's live. Hey everyone, welcome to the Wise Wall Show. Testing. Do people hear me? Am I loud and clear? Look, it says I'm stream health yellow.
Yep, there's your...
It will not pop the chat out though. I will not do that. Oh, wait. Okay, I got the chat open now. Welcome to the Wise Wall Show, guys. If you're just tuning in, please just wait a sec and we'll get everything technically set up. Let me know if you can hear me loud and clear. I do have a cold that I'm fighting. This is what happens when you have a 3-year-old daughter in preschool. She brings home all of the nasty things, and unfortunately, I get them all. I do have a confession to make as of late. I've been pushing myself, burning it at both ends, and we're going to talk about that in just a minute, about what that's like, trying to build businesses and push yourself beyond what you should be doing. We're talking about why you should outsource certain things, why maybe you shouldn't outsource some things, and why you need to focus a little bit more on your health, but at the same time, you need to focus on your hustle and your businesses. So, hey everyone, I see Taggers on there. G1 Mercury, good to hear you. Mike's on as well, everything's good, he says. Shaylin Paris says, hey Mike, loud and clear. Right on, guys. Good to see you all on. It's been a while since I've shot from the camera. You guys know what's happening? For those people who are just tuning in versus those people who are going to listen to this replay, we have 2 channels now. Kyle's going to shoot a link to the channel right in the comments of this video. We're going to also put it in the description. I'm going to share it and post it as a comment after the video has been uploaded and recorded. But there's a new YouTube channel. You go on my Instagram, at Mike Rosehart, and you can go there and swipe up in my stories to find it. You can go ahead and jump on my Facebook pages and find it there as well, Mike Rosehart-YouTube. We'll also post it here. So you can jump on that channel. It's going to be called the Mike Rosehart Show, just like exactly what we've been doing for 50 weeks now. This is episode 50. We have gone live 50 episodes. I've not missed a week for 50 weeks. So I think that almost deserves a round of applause right there, because 50 weeks while I was in Newfoundland on vacation, no matter where I was, I made sure from the hotel room Wi-Fi that I went live for my phone. So that was something that was a commitment I made, and I want to talk about commitments, because it's important that not only do you commit to the people in your network and the people that rely on you, but commit to yourself. If you say you're going to do something, do it. Your word means everything. My word, my reputation means everything. I care more about what people think about my brand and my reputation than I do about making money. Because in essence, the two are the same. If someone trashes, you could spend a lifetime building up who you are, right? Someone that's always trusted and pays their debts and all these good qualities, and then one bad business dealing or one thing you do wrong, one corner you cut, and your brand is ruined. So I think I always try to make all the decisions from, not just like what is the right thing to do, because that's obviously part of it as well, but just asking yourself, like, would you want people to perceive you this way? So if, let's say you're like going to cut corners on a material in a flip or something, right? And you're like, should I cut corners on this one material? Well, think about it. If you're going to sell this property down the road to someone, will that person then talk negatively about you because of something that you did? So always try to do it, obviously cost effective as possible, but with that in mind, knowing that it's important to kind of think of the future and think for the long term. So that's what I think thinking about your reputation is about. Don't focus on making $1 now. Focus on how you can sort of build a brand that will last for a long time and cash flow for a long time. Right on, Brandon. He's going to catch the replay and said, go to see a client. Good luck. Good luck, Brandon. Best of luck. So your property's coming along too. We're pretty much done on that. The painting's all been done. The electrical's all been fixed up, and did a bunch of other stuff on it as well. So that's exciting. So jump in the comments, guys. Bring your questions, whatever you want to talk about. I'll kind of share what's been on my mind, and we'll kind of reconvene in the middle for question and answer. So I'm battling this cold. It's brutal. I saw Avengers last night, guys. The Avengers Endgame. No spoilers here. My opinion, not that good. Infinity War, much better. So I was actually quite disappointed. Interesting with Silver City and the famous players and IMAX in general. The IMAX seats are worse than the general admission seats. Why do you pay a premium for a crappier seat that you can't really recline and that isn't comfortable? I don't know. That's my thought. That's my frugal tip of the week. Don't buy IMAX. Just find a way to get the general admission. What have I been up to this week? So we've done a lot of things in the business side with accounting and systems, and we're trying to catch up on all of our paperwork. There's a lot of paperwork investing in real estate. One thing I will say, while I do love partnering with people because it allows you to scale your brand way quicker and scale your business way quicker because you bring on people, they inject capital in your business, they inject, maybe experience or strategy in your business grows, right? It explodes. But one of the downsides, I think, to partnership is the backlog of paperwork associated. So every decision, you have to get the buy-in of all the partners, and then you have to basically account for all of these things and then disseminate all that information. What partnering does do is get you to get on your top of your game. It forces you to document. It forces you to get your systems down and really be more professional about how you invest in real estate and how you basically make real estate your brand. But anyway, so that's that. I'm just gonna make sure this thing is, it's got a little error message. It says stream health yellow, but I think it's still live. Someone tell me it's still live down below. It just came up with a little notification saying it's yellow, but I think it's still good. The cord is connected, so going from the laptop today, and I think it's all good, but that notification might just be that my internet's a bit slow. Maybe you guys are getting a bit of a lag on the voice to audio, or maybe YouTube's just saying there's something wrong when there's absolutely nothing wrong at all. Is it tough or worth it to refinance a student home on Fleming? Purchase, pay down, 145K, worth maybe 280. So Brian Smith, yeah, so it's definitely not difficult to refinance a property in general, but Fleming Drive is a specific street in London right near Fanshawe College that has been notoriously known as a party place. In I think it was 2012, there was that big riot party where there was fires and cars trashed, all the houses got destroyed. A lot of banks are afraid to own houses right there, right near the university, for that damage risk, right? Not impossible. I know a lot of people have refinanced on those streets. There are credit unions and banks that are okay with student rentals. Meridian Credit Union, for instance, is fine with student rentals. You may have to put 25% down, but they'd be fine to do a refinance on that in most situations. The banks like TD, I know it requires like 30% down on a student rental. Scotiabank was more aggressive. They did a 25% down on a student rental. You could just say it's not a student rental, right? And how can they prove that it isn't? You'd have to prove, they say, hey, it's in a student area. Yes, it's in a student area, but it's not a student rental because of X and Y. I have a group of professionals in there, or whatever it is that you're doing. You could just argue that it's not a student rental, and that would get you the refinance. You say it's worth about 280. Maybe it's worth more. You know what I mean? In Fleming Drive there, most of the properties are unless it's like a semi, most of the properties there are well into the 300s. So if you got a mortgage on it for 145, you might be referencing the Instagram post I did, which is a bit provocative, and I almost want to do a video on it, but it was the idea that, I still have the notebook in front of me, guys, right here. It was the idea that someone was talking to me about why I sold some of my properties. Why would you ever sell property, Mike? That makes no sense. You want to own the property, you want to pay on the mortgage. And I'm like, whoa, stop right there. That's a myth. You don't necessarily want to own property just for the sake of it. And two, never pay down your mortgage. That's the worst thing you can do. From a financial perspective, you want to take that capital and invest it and get a better than 3% return. When you pay down your mortgage, you're guaranteeing like a 3 or 4% rate of return because that's the rate of cost of your cost of debt on your mortgage. So that's the return you're going to get. 3 to 4% is a terrible return on investment. I believe you're much better off, and plus you get a tax write-off on your rental property anyway. So that 3 or 4% is reducing your write-off you're going to get at the end of the year, and in fact hurts your tax burden. If you're at a 50% tax rate, that 3-4% can really actually be much lower return because it's costing you from your tax shield. It takes from a bit of your tax shield. So you want the biggest tax shield you can have, right? You want to block from paying tax to the government. So you want to borrow that money because that interest is tax deductible. Mortgage equals good on rental property. Leverage equals good on rental property. Takes your return on investment and cranks it way up. For instance, if your property's cash flowing $1,000 a month, if you have 20% down on a $200,000 property, you have, what is that? I said 20% down on $200,000. It's $40,000 in capital. Closing costs, call it $45,000. Let's just say simple math, you had $40,000 invested in capital, 20% down. $40,000 and $1,000 a month in free cash flow. That's a great return on your investment, right? Call it like if there's a $250,000 house and there's a $50,000 down payment, that right there is like 2% return every single month, right? So that's like a 25% annualized return right there before appreciation, before mortgage pay down. That's huge. That's what you want. Now, that same example, if you own that house almost outright, you'd pay almost all the mortgage off, $1,000 a month in free cash flow on $200,000 investment isn't that great. That's a 0.5% return less than, right? So it's just not as good of a return. Much sexier to have, 2% return every month than a 0.5% return, right? 0.5% return times 12 is 6% annualized return. Properties that don't have mortgages on them in London, in Ontario for the most part, trade between a 6 and 9 cap rate based on net operating income. What that means is before financing costs, you're looking at 6 to 9% return. Real estate isn't that attractive if you don't finance and lever it up. If you decide just to own in cash, it's not that attractive. The return on investment isn't as good. Now for a flip, it can make a ton of sense. For a short-term hold, it can make a lot of sense. For some deals I've seen where they're not financeable, it makes sense to hold in cash. Is it a good long-term play? No, I don't think so. Is it a good short-term play? Yeah, maybe. So yeah, that's what it is at the end of the day. And I think it's really important that, can you finance? Yes. Should you take the capital out and deploy it to buy more properties? Yes. So it's a matter of how do you go about doing that, right? So I think the way you go about doing that, Brian, is get to have meetings with the right brokers and the right lenders. Maybe you got to go to some of the credit unions and talk to them. I've heard credit unions that are okay lending to people who have 20, 30, 40, 50 properties. They'll open up their small business division and they'll lend all day long on that. So you're not necessarily having to run out of mortgages. You may have to pay a slight premium on the mortgage interest rate. So instead of 3.5%, you might pay 4.25%. Is that going to make or break? Not if you have a lot of cash flow in the property. That's not going to be a huge deal. We're talking maybe 800 in cash flow instead of 1,000. Not the end of the world, right? So there are lots of options to put that capital to work. And I'd rather have 5 properties 20% paid down than 1 property paid down. And I was talking about earlier in this Instagram post about grabbing all of your real estate portfolio and saying, hey, if my real estate portfolio was worth, say, $4 million, right? Hypothetically. And I had let's say I bought those properties for all a couple $100,000, and they're worth now almost $400,000 because I'd owned them for 5 years. The market had been good. A lot of people think you should just hold your portfolio. It actually makes a lot of sense to rebalance your portfolio if you can't refinance. So the equation kind of is like, if you can refinance. If you can't refinance, then maybe it makes sense to sell, especially if your property could sell at a 6 cap rate at market value. You want to say, at market value, does my property cash flow? And often it makes sense to sell overvalued areas, overvalued properties and overvalued areas, and buy in more gentrifying neighborhoods that have better cash flow. What you're basically doing is, if you've already improved your property all the way, you've made it really nice, you've renovated it all the way, cash in on that value you've created and buy another property that needs to have some work done, needs better tenants in it, needs something done to improve the value of the property. Then you basically create more value. That's what I did. I sold 11 of my properties off in 2017 and 2018, and I went and bought a whole bunch more. So I think that sometimes it makes sense to sell so you contract and then you get bigger again. And you contract, you trim the fat, and then you get bigger again. I've always done this. It's just been my strategy in life. I'll push myself really hard, then I'll take a big break, and then I'll come up with some new breakthrough idea, and I'll explode my business, and I'll make $1 million in like a series of couple months, and then I'll get into this grind where I'm at right now, which this is extremely personal, but I'm at a point right now where I'm very burnt out. Every day I wake up, I get texts from all the contractors, get texts from all the people that are all the tenants and things like that. And just like even a few texts can throw off my entire morning, my entire afternoon. And when I like to get in the flow of doing things, it's hard when you're running a business and there's so many moving parts. So that's something I'm going through right now personally. We're trying to build the systems and get the people in place. The mentees are doing a ton of great work, and they really are helping us move forward and helping us really build this business out. But it's been just where I'm at right now. I'm not in a good place with my mental psyche, and I need to get my mental psyche on point to really explode the business. And it's hard when I've got pieces of my brain or pieces of my psyche, or I get in certain moods where it's like, I miss that retirement. You guys know I was retired for a while. It was a lot of fun. And I miss pieces of that. Now, being retired, I think, and doing nothing, that's boring. Like, I'm the type of person who needs that personal growth, who needs that financial growth. And I need to be growing in different areas. And I'm not sure how to satisfy that. It might be partially a mentee program. It might be that it makes a lot of sense to help other people grow. And in the process, maybe I have a mentee real estate fund or something that grows and builds. And of course, Right Way, I won't abandon it. I would always keep going with Right Way. I just might not grow as aggressively as I'm growing right now. I might go through a period where we get caught up, build a ton of great systems, and then explode again. Right? There might be 3 months of no deals, take a break, get all the renovations caught up, get the systems in place, get the people hired that we need. So the next time we grow, we've got, say, 30 contractors ready to go when we explode and buy 10 or 20 properties during the next cool down. Right now, the market's been really hot in the spring. I'm not extremely excited about the fact and the prospect of just buying houses to get a real estate commission or just buying houses for the sake of it, right? It's got to meet my metrics, and not a lot of the properties are meeting the metrics right now. We're doing like a deal a month as opposed to a deal or two a week like I'd really wanted to do. So I need to either go deeper or I need to wait until the time is right to buy. And the time will be right to buy again. I think the heat of the summer is a good time. People go away for vacation in July and August. Not a lot of people are hunting for houses. It's a good time to buy. A lot of the student rental properties have been sitting vacant for a few months. The landlords are starting to feel it. They, the guys who wanted to list in the spring, a whole bunch of people get excited to list in the spring, and they decide they're going to finish their hardwood floors, and then they're going to like just start working in their basement. They run out of money, or they decide, oh shoot, it's already like end of May. Let's get the paperwork together. They list by mid-June. Those kind of people will catch all those people who missed the wave. All the people bought the houses, the demand was satiated, now there's an oversupply. So summer's a good time, and then the fall, of course, average 12% lower house price. So excited for the fall, gearing up for that. I want to take a lot of time this summer with my second baby coming on too. There's so much going on, right? And so many different directions I'm being pulled too, which is, it's hard when there's so many, it's the first world rich man's problem, but the first, holy crap, all these messages here. Okay. Holy, I got a lot of messages to respond to. And I promise I'll get to all these guys. Financial Investor, Keeli, Tom. I see all you guys on here. Frank. I see all you guys on here. Jonas, I see you hitting it. See the comments. I'm going to read all these comments in just a sec. Just want to finish my tangent about focus and about opportunity. It's a rich man's problem, but as you build a brand and it's funny, the wealthier I get, the more opportunity I have. It's like 3 years ago, I had tons of energy and I was ready to go and I would partner with anyone and I would have been happy to have a millionaire come poke me on the shoulder. Now it's like you get to that point and the resources just come at you and the opportunities come at you. I'm getting messages like weekly for people to invest in their businesses, for me to help even as an advisory role, to help be on their board and help them, grow their business or whatever. And it's like, there's all these opportunities, all these directions, and there's only so much time in the day. So where do you put that time? And then I've got people who are entitled. It's crazy how many entitled kids there are that come on Instagram and say, coach me. Like, let's get on a call right now. Or friends come out of, I got a lot of friends from high school and stuff that come out of the cracks and say, hey Mike, heard you're really successful. Let's go get lunch. And it's like a dozen of those people. And they all just want basically free coaching, right? They want to learn how to do what I did, right? And they want the simple silver bullet answer, and there isn't one, unfortunately. But it's crazy that as you build up a brand and build up wealth, like as you basically become successful, people want a piece of that. And it's hard, I think, to balance all that for me, because I'm the type of person who's a yes man. Like when someone says, can you do it, Mike? I'm like, yes, I'll get it done. Yes, I'll get it done. Yes, I'll get it done. But when I say yes 1,000 times, it's hard to honor the yeses to everyone. So I have to be very selective of who I say yes to now. And that's hard for me psychologically. It takes a big toll, I think, on who I am, right? Because I really do like to stand by my word and honor what I say I'm going to do. So that's been something I've been battling with. In a bit of a lull, like I said, and when we get out of this, I think we're going to be bigger, better, and stronger. There's a lot of things coming our way in the next few weeks, few months, and few years. So stay tuned for that. Ton of business ideas we've got going, and we're buying another business as well, as you guys know, which is really, really exciting. I can't share it yet because we're under non-disclosure, but soon enough, you guys will see some videos on that on the main channel and of course on the side channel. The reason I want to start this side channel, the Mike Rosehart Show, is because I can just literally go live whenever I want. I can pick up the phone and be like, hey, I'm out of property, guys. Check this out. And do a 1-minute stream or something just for fun, just to update you guys. It's more like this channel is like my Patreon, but it's free for you guys. Maybe you want to donate to it, cool. You want to do some super chats to it, whatever, that's cool. I'm down. I'm going to charge you $0. But I want to give you the inside track. It's like almost like Instagram, but a bit longer form content, more live stream stuff. So that's what the channel is going to be. If you subscribe to it and hit the notification bell, you'll be part of that, and I hope you are. And then the main channel will not get screwed up from the algorithm's perspective with bad click-through rate. So for instance, when I just post like a random stream and it's like me going, hey, no one clicks that. And so it gets a really bad click-through rate. When YouTube goes and pushes that in a random search and they see all these great videos and they see a random live stream and it has a bad click-through rate and maybe it has bad percentage of watch time because it's an hour long and people watch 10 minutes of it. So then it looks really bad to the algorithm. So I think if we separate the long form upload content with the longer form streams into two channels, I think we're gonna have much more success. I can't even customize the URL until 100 subscribers, and we don't even get super chats or any of the extra features. I think I can't even go live longer than, you can't even upload certain video lengths, I think, unless you have a certain number of subscribers and watch time.
No, that's fine.
There's like streams or something, like 30 minutes. There's something, I remember reading there was something to do with?
It was limited to 15 minutes before I verified the channel.
There you go. Okay.
But I verified the channel and just
Okay.
sent my phone.
There's something to do with like when you get to 1,000 subscribers. There's a bunch of stuff that I unlocked the first time I got to 1,000 subscribers. I don't remember what it was. Part of it was monetization, but there was something else that got unlocked with that. I don't know what it is, but anyway, getting to 1,000 subscribers would be great. So we have to try to funnel all you guys who watch the show, get you guys over to the other channel. Kyle posted it in the comments here, so jump over there, hit the subscribe button. You literally just type in like the Mike Rosehart show, and it should come up. The channel's just freshly created.
It might still be buried in search results.
It's probably still buried, but we'll get there.
I'm posting the link. I'm going to post it every like half hour.
We'll share it. We'll share it around. We'll get the link out there so you guys can get a start. I'll probably post on this channel before I go live for a few weeks, just so people have a chance to kind of know where there's a new channel going on and why Mike isn't streaming here. So, okay, now I'm going to catch up on all these questions because I just went into a dark hole, and you guys might bury me back there with these questions, but we'll see. Hey, financial investor, good to see you on. Tom Craig says, hey, how's it going? Future Wiz, good to see you on. Interest rates are still 3 to 4% on mortgages. Future Wiz, yes. Actually, interest rates have clawed back a fair bit. I have to go on my phone to check, but what are the interest rates right now? Let's go to RateSpy and see right now. Let's just like live, see what's good. Actually, I haven't checked myself in a little while. It's always good to see. But I've heard that things are trending down. Last I talked to the mortgage brokers that I know, things are trending down. So ratespy.com, let's just check this out right here, guys. This is the place to go. I love it. So 5-year fixed, the best in the industry right now is a telemortgage at 2.68, 5-year fixed. Okay. 5-year variable, 2.61. 2-year fixed, 2.89. 3-year fixed, 2.69. 4-year fixed, 3.04. 7-year fixed, 3.34%. HELOCs at 3.75% on your primary residence with Modus Bank. Butler seems to have the lead with the 1-year fixed at 2.83%. There you go. So 5-year fixed rates right now at 2.68%. That is insane. That is a competitive rate, probably just on primary residence. So you might have to say you're going to live in the rental property and then change your mind once you close on it. I didn't say that I'd done that or that people do that. Yeah, so there are lots of ways to get really cheap debt. Here in Canada, a 5-year fixed rate mortgage on a 25-year amortization, 2.68%. So we're seeing again in the 2%, there was a time where it was like 3.5%. So the banks are getting very hungry for business. Despite prime interest rates hiking up, we're seeing interest rates that are very, very competitive. Well below 3%, very attainable now. What I'm seeing 6 months ago, we were looking at mid threes all day long. I got a mortgage on this house with a credit union at 3.79, so on a 5-year fixed. Now, mind you, I don't have great job income because I'm self-employed, and I'm also not what the bank looks for because I have a lot of properties. They see me as a higher risk than someone who has. It's funny, the bank would prefer to see someone who's broke but have a job than someone who's rich but no job. Makes no sense, but that's the bank prefers to take that risk. I think the CRA, the government has put in a bit of a mandate. They want to see entrepreneurs showing more income. So anyway, they're making it harder and harder for entrepreneurs to get mortgages. It is the way of the world. Future Wiz, yes, mortgages are definitely in the 3% range all day long right now. Financial Investor says personal mortgages can be 3 to 4%, so I guess it can be 2 to 4% now. I've just confirmed on RateSpy. Check it out. I get no affiliation. I really should get an affiliation because I pump the hell out of these ratespy.com guys. They're way better than RateHub. Where's my referral link? Someone go reach out to RateSpy and say, hey, Mike Rosehart always is pumping your guys. You know, I've got tons of mortgages because of you guys. That would be cool. Jonas on here saying, watching you at work. There you go. Shabazz says, what's a good financial institute to get a line of credit from? Depends on where you're from. US, Canada. Any of the big banks are fine. Any of the private lenders probably all right, depending on your current credit score and financial history based on your income and all those things and your overall net worth. You'll probably go to an A lender first, and then if A lender fails, go to B lender. Some A lenders would be in Canada. You know, you got all the credit unions are considered A lenders, so like Main Street, Meridian, Libro. There's a whole bunch that exist here in Ontario. There's like the Van City one in Vancouver. A whole bunch of great credit unions. And then the big 5 banks, so Scotiabank, Bank of Montreal, TD, CIBC, and RBC. I believe I got all 5. What do you do for offers? What's your process? Thanks. So Frank Downey, good question. When I do offers, so this is my personal approach, but I like to write the offer out in paper, and I bring the offer to the seller. And I walk them through the offer, line by line, explain where I'm coming from. The nice thing is I can look at their face and I can tell if they don't like something in an offer. they will wince at a closing date or might not like something like that. Whereas if I just presented an offer digitally on DocuSign and said, here, do your best, what you'll often find is that you're not going to have the same success, same rate of success, or the same. I can often even wiggle price. Like they might say, oh, I really feel like 3 weeks less closing would be better. Having that person-to-person conversation, I can feel that out right there and cross my offer off.
You're saying the screen went black. Did that fix it?
Oh, I didn't even see all the comments. Can you guys see the screen still?
Yep, it's back.
What was it? The camera just died?
I'm not sure what happened. I just noticed that.
Are we back on? Someone tell me this is
Yeah, we're back on.
back on.
Oh, there's a box around you now.
Oh, I can see the box. The autofocus box is on. How do we turn that off?
Hang on.
Let me see if I can adjust this up here.
You won't be able to do anything there. Hang on. Don't click anything. Go to that desktop.
Mm-hmm.
Find the. There's
We'll have to live with the box at this point.
maybe.
Mm-hmm. Hang in there, guys. We're trying to fix this
Go to
box.
that. There we go. Click that little yellow button there. There we go.
Remote live window view. Okay, we're in the wrong screen still.
Now drag that up to that desktop. No.
Okay. Like 6 desktops open right now.
Yeah.
Second desktop.
There you go. Now click back to your normal stuff.
Desktop 1. Desktop 2. You have so many desktops going, man. Where's the pop-out chat? There it is.
There we are.
Okay, is the box in the face gone, guys?
Yep.
I think we're good now.
Yeah, you're back.
How long was it out for? Sorry.
I don't think it was out for that long. I just noticed it.
Okay, so I guess I showed that to the screen for no reason. But basically, ratespy.ca.com, we were talking about interest rates. What else were we talking about? Process for offers. I'm a big fan of bringing the tangible, physical, printed offer to the person that's sitting down with them. A lot of realtors are lazy and just want to fire it off over DocuSign, which is fine if you have another agent. Like if I can't sit down directly with the seller, there's no point in doing the printed offer and might as well send off a digital copy. But if I get a private deal where I'm sitting down with the seller, having a one-to-one conversation over coffee or whatever, or at their house or whatever it is, we can have a way better discussion when I present the offer in person. Saying the offer, over email is not great. A lot of people just send the offer off and leave it in the nether. I'm like, hey, we got like 12 hours to firm this up. Let's sit down. Let's walk through the whole thing. They might say, I'm not sure. I need to talk to my lawyer. No problem. Bring it to your lawyer after. Let's sit down and have a conversation about that. So I'm a big fan of sitting down with people and having a human conversation about their property, about the offer, and walk them through. And then often the conditions you think are best for them are not best for them, or the conditions you might want might not be the right conditions for them. So working that with them. Sometimes there's little things like they want to make sure they've included like their grandmother's mirror is going to be safely taken out of the property, and just silly stuff like that will get you the deal done. So that's how I take care of offers. If it's MLS, then I'm also a realtor, so I would just write the offer up and present it to the agent, and I would convince the agent to work with my offer. So why is my offer better than the other offers? Well, because I buy a lot more properties than everyone else does. I have a way higher chance of closing, often no commissions. It's about having a great track record and working with the agent to make their life as easy as possible. So I will do all the paperwork. Often I'll say things like, hey, as the realtor, I'll manage this, you're from Toronto, I'll take care of this property. Free property management, I'll walk by your property, make sure it's okay. The sellers feel very comfortable with that. Their agent feels comfortable with that. They don't have to worry about taking care of this property for their client. So do things for the realtor, so then the realtor will recommend your offer over the other offer. I know it's not a fair system, but that's basically how it works. Offers that are a couple $1,000s difference, you can still win even if you're a couple thousand less, because you have better terms, better qualitative factors that are also often more important. Hopefully that answered your question. And then the next one is, how do I know if stocks or real estate are better for me? H. Metalmosh, good to see you on again, by the way. I see your familiar face for me, or familiar name at least. So how do you know? You don't know. You got to try both and see what's better for your stomach. What helps you sleep at night? It's that sleep at night factor. Maybe for you it's you feel very comfortable in exchange traded funds, ETFs, where you're owning funds that own thousands of stocks. You don't manage a thing. It's a set it and forget it, once a year rebalance. There's the Vanguard all-in-one ETFs, for instance. There, you buy it once a year, set it and forget it, get a 6-8% return, something safe, and not have to worry about a thing. It's one option, right? You don't have to worry about anything. That's the the more passive approach. Then there's things like private lending where you can make 8, 10, 12% lending to real estate guys like myself. Like I borrow money often from private investors. Some of my old deals back in the day, I needed a down payment to close on a property. I put it on Instagram, and actually I put it on Facebook back in the day, and someone on Facebook DM'd me and was like, yo man, we went to Ivy together, we went to Western together. I've got 60K, I'll lend you. I'm down to make 10% paid monthly. That's cool, I can help you out. I trust you, let's do a loan agreement, done. Right, so that kind of stuff is really key. Putting it out there that you need the capital is really important. I think that's a key takeaway if you're gonna go that route. And then there's the real estate route, which is less passive, more active. Are you willing to cut grasses? Are you willing to change toilets? Are you willing to place tenants? What are you willing to do at the property? Do you want to outsource everything? Then run the numbers on that. If you've outsourced everything, what is the net profit at the end of the day? Maybe leverage still makes it worthwhile because you're doing 5 to 1, you're putting 20% down, you're buying 5 to 1 of the assets. Maybe it still makes sense for you. And that's a call you've got to make. Maybe buy one property and start there and add some value to it, have some fun with it. You might decide like I did, where you got to a certain point and you're like, you know what, I don't need to be doing this anymore. And you stop and you basically sell. And then you might decide, you change your mind, retirement's a bit boring, you've got all this $1 million sitting around. You might decide, hey, maybe I want to start a company, but I don't want to be doing that grunt work anymore. I'll get people to do that. And I'll get big enough scale that I can have a company that runs my entire real estate portfolio for me. So there's several options, and I think it's a personality type, but it's also a developed skill. Because in the beginning, I didn't want to change toilets. I hired people to do that. I didn't know how to do that. Depends on whether you're willing to grind or not. What's your current lifestyle like? Do you have the time? Are you a busy guy working all the time, or are you just getting started? And maybe you have the time. At the time, I figured the average real estate investor makes $25 an hour. Sorry, the average landlord makes $25 an hour on their time. Going to the property, checking it out, fixing things. You get average $25 to $30 an hour, depending on the property. I've seen some of my properties where I made $50 an hour when I average my time, return on time. So it's a decent paying job, but owning real estate portfolio and operating it yourself is a job. Let's be clear. Doing the tax work, doing the bookkeeping for it, going and talking to tenants, placing tenants, managing the property, coordinating trades, all of the things associated with a real estate portfolio, doing the renovation work, all of that, it's a job. It is a part-time side hustle. It's a part-time job. You can make it a full-time job if you build it big enough, but it is a job. And so that's something you have to think about when you're deciding what you want to do with your stuff. The beauty of real estate is that it can be a really good paying job, especially when you factor in appreciation and value add. So you make a lot of money when you buy a property for say $200, spend $40,000 renovating it, and then sell it for $350, right? Or refinance it with a BRRRR at $350. Then you make $100,000. Then it's a really good paying job, right? There are some real estate investors that make a few $100,000 a year all day long. I don't know any real estate investors that make more than $500,000 a year for their time. Now their capital might be making them more than that, but I don't know any that make that kind of dollar. Like the dollar per hour just isn't that good with real estate investing. The highest value thing you can do with real estate investing is find out how to buy smart and how to add strategic value. The rest is low value stuff. Placing tenants, managing the property, all that can be outsourced at $30 an hour and under. So that's something to kind of think about at a really high level. Hopefully that kind of stimulated your brain and got you thinking. Okay. Lost my place. Found it again. So real estate investments are easier to calculate versus stocks. If you run numbers correctly and set aside capital for the expenses, then your percentage return is fairly certain versus stock market returns. Financial investor, I would add to that saying, in both situations, if you plan and run your numbers accordingly, both options are fairly predictable. Stock market returns, if you have a decent portfolio of ETF, exchange traded funds that track the major indexes in the world, you should get on average 6 to 8% consistently. Now there's going to be something called volatility, which is the fluctuation between those targets. So over a 10-year period, you're going to get about a 6% average return. So over 10 years, your money should double no matter what. If you hold stocks and you wait 10 years, your money's doubled. You hold real estate, you wait 10 years, your money's probably doubled or tripled. One requires effort, one doesn't require near as much effort. To trade stock, if you're day trading and stuff like that and do momentum trading and all those types of actual physical active trading, like where you're buying and selling every single day on certain algorithms and certain patterns, then it's going to be a lot more work. You're going to spend time analyzing the companies and analyzing the trends. I don't recommend that way. 99.9% of stock investors that trade over a 25-year period using those momentum trading, historical trading, I've seen like trend analysis trading. I've heard people doing some value investing trading. I'm talking about active trading, not buy and hold long term like Warren Buffett style. I'm talking trading, actively trying to trade stock. Those guys, 99% of them, more than 99.9% of them over a 20-year period lose to the S&P 500, the basic index. So chances are you're not going to beat the market. So unless you think you're Warren Buffett, which you're not, yeah. So anyway, that's my thought on stock trading. I realized as a finance grad from one of the top business schools in Canada, when I was day trading, there'd be days I'd be up thousands of dollars. I'd have days where I'd be like, and if Instagram was a thing back in like 2010, which it wasn't, but if it was a thing in 2010, I would have been posting like, made $1,850 today, made like $3,000 today. And it was like, I was margin trading too. So I was trading like 3 to 4 times what I actually had in my account. I was borrowing money at 6% to trade on stock. And my experience day trading was this. There were days where I made a ton of money. There were days where I lost a ton of money. I never talked about the times when I lost money. But when you add it all up, the aggregate of what you'll find over a long term, over a short term, you can beat the market. In a year, 2 years, 3 years, you could beat the market. The last 10 years have been the hottest bull market we've ever had. So almost all the day traders are doing really well because it doesn't matter what you bought, you did well. But that aside, what I found was that the S&P 500 did about the same as what I did over a 2-year period. And so there were days where I made a ton of money. It was lucky I cashed out, bought a property when I did. I was up overall. So I took my gains off the table and walked away. It was basically educated gambling. It was like I was going to the horse races and I had a little bit of an edge. In real estate, it's totally different. It's like it's not like I have a little bit of an edge like I had with stock trading. I could analyze financial statements. I was very financially literate, right? So that gave me a bit of an edge over the average DIY investor. The Wall Street guys, all those guys had more of an edge than I did. They had access to better information in better time, better models than I had. So they had a better edge than I did. So why did I think I could beat those guys? I can't, because they do it all day long. As a part-time trader going to school, there was no way in business school that I could beat those guys. So I realized, where do I have an edge? In real estate, I could develop an edge and have an edge very quickly. And it became apparent to me that insider trading in real estate is a thing. Like, you trade on information. That's how real estate works. You buy undervalued properties for 80 cents on the dollar. I can't buy Apple shares 80 cents on the dollar. It can't happen. And in real estate, you don't even have to worry about appreciation because it goes the same as the stock market, kind of goes in a general upward trend. And every property you own in the city goes up at roughly a same percentage. Whereas with stocks, you can pick a bad stock. You can't really pick a bad property. Like even the worst properties that had the bad foundation leaks, I fixed for like $5,000 to $7,000. I tunneled down like 20 grand. You tunnel down and fix your house. It's hard. You just can't lose money in real estate. Like there's a stop loss at 0. I don't know how you lose money in real estate unless you're retarded. Like you just can't. If you're buying cash flowing property, even if you made a bad mistake and you had to dig around your whole foundation with an excavator and re-pour a second foundation and waterproof the whole thing, say it's like 30 grand, worst case scenario, right? Like 30, 40 grand. And it needs a new roof too. So like there's 10 grand, there's 50 grand on a $300,000 property. You just dropped 50 grand you were never expecting. You screwed up so bad. You bought the worst property in the whole block. If you're cash flowing still though, $1,000 a month, you did your numbers and you bought the right kind of property, appreciation will have recovered that entire damage in like a year. You have mortgage pay down and cash flow to recover that in like 2-3 years. You literally just hold and you make a ton of money. And by the way, on average, you're not going to buy those bad properties. On average, 9 out of 10 of your deals are going to be decent and you're going to make a lot of money. And then what you're going to find is that you can learn how to arbitrage. Retail arbitrage is the idea that you can buy 80 cents on the dollar. Your first property, you're going to buy 100 cents on the dollar, maybe even 105 cents on the dollar because you don't know what you're doing, but you get better. And then you figure out how to renovate for half the cost. You figure out how to get it done cheaply. And that's when you get real massive value add. You buy 60 cents on the dollar, spend 10, 15 cents renovating it, and you're all in 75 cents on the dollar, and you've got a property worth $1. So you do that with $1 million, and you've got 750,000 turned into $1 million, right? So you got 250,000 upside gain. The best part is with real estate, I'm not borrowing on a margin account at 6.5%. I'm borrowing 5 to 1, not 2 to 1, 5 to 1. So I can borrow way more at like average cost of debt 3%. So real estate's just like a no-brainer for me as an investment vehicle. There is no investment vehicle that I know for the person just starting out, you know, with less than $2 million in capital. Because by the way, you can flip businesses in the same way. I just can't share too much, but we just got approved for well into the 7 figures. A lender bank financing at 4.69 on a business we're buying. So you can actually lever up my businesses too, which is really exciting. That finally came through. I can't talk much more about it than that, but we're buying a really big business and it's exciting. And when you get into that period where you have a lot, you're multi-millions, you can start getting into some deals where you can invest in things other than real estate, and banks will take a chance with you. But when you're just starting out, you have less than $1 million net worth. So you have a couple $100,000 saved up, a decent job. Pretty much 95% of the population, real estate is the only investment vehicle that I know of where you can get almost no downside and 25 to 100% upside consistently because of cash flow. Forget appreciation. In a flat market, 25 to 100% return on your money in like a 2-year span. That kind of return at that kind of risk level doesn't exist anywhere else. That's the thing about real estate. That's what it is for me. Tony, if you're watching this, you asked me this question, like, why real estate, Mike? Like, what got you into that? It was that realization. It was that aha moment that there's no other asset class in the world. Like by itself, this asset class is not great, but on like unlevered, right? Just unlevered bought in cash, real estate's nothing special. It performs slightly better than the overall market. But the S&P 500, like compared to the S&P 500, not that great. But when you lever up 5 to 1, gets really sexy really quick. And it's like a stock that has a stop loss built in that pays 25% dividend because of leverage. Like you just can't get that. That's insane. So that's my thoughts on that. My daughters are there crying. She wanted to come in. So sad, guys. Yeah, hopefully that was helpful and added some clarity and some light to the situation. Now I'm going to catch all this up. By the way, if I answer your question tonight, you have to subscribe to the new channel, hit that notification bell, and at a minimum, share it with one friend. Just say, hey, there's this show called the Mike Rosehart Show. This guy drops a ton of great content. He will give you $200 an hour consulting coaching fees live. Whatever question you want, I'll answer it. Access this resource. It's here for you. Okay. I lost my place. Where was I? Financial investor. I did your question, I think. Tom Craig asked, where did you learn about flipping businesses? How do you get started? Where do you find a business to buy? How do you value the purchase and its potential value to make a decision? Tom, that's a loaded question. There's like 6 questions in one. So how do you learn about flipping businesses? I went to business school. I went to the Richard Ivey School of Business, the top business school in Canada. Second to none, modeled after the Harvard program. So it's a case-based method of learning. I was exposed to a ton of great people there, and a ton of great professors there, one of whom taught me entrepreneurial finance, one of my favorite courses at Ivey. And it was there that I was really exposed to buying small businesses. So less than 25 million in revenue is a small business in my mind. I like to buy businesses. For me, the sweet spot is 1 to 10 million in revenue. I would never touch a business with less than $1 million in revenue. Too small for me. Requires the owner to just operate it. I want a business that'll run without the owner, right? I want a business that's going to be more passive, where I can make big strategic plays. The places you can add value in a business are this, as follows. You can almost just like write these down because this is the truth. Strategy consulting, so you change the vision for the business in some way. Cost control, so maybe the current owner was really bad at managing the bottom line. They just didn't care. They'd spend money on whatever system, this and that. Systems, so putting in good systems to get things done more efficiently. For instance, imagine a system where you put receipts in a box. That's not efficient. A new system might be have an app where all the employees take a picture and categorize the receipt right away and send it to the cloud. And it's organized for your bookkeeper. That might save you thousands of dollars in bookkeeping and accounting. Little things like that, little systems that make things way more efficient. Maybe a tenant sends in a maintenance request and it's automatically forwarded to the contractor. That can save a property management company thousands and thousands of dollars. Those little things that add up to massive, massive impact at the end of the day. So that kind of stuff. Cost control. Hiring the right people and managing the right people properly. There are a lot of managers who are bad. Just hands down, people suck at managing people. I'm not going to claim that I'm the best at it at all, but some people are just nasty individuals to work for. And it's interesting, we did studies even in Ivy. I remember reading cases where they would change out a manager and a team could be 30 to 40%, sometimes even 100% more efficient. They get 100% more work done with a different leader in charge. So being a good person at managing people can add a ton of value. You go into a company with 20 or 30 employees and you get double the productivity out of them by making some small shifts and changes to change how they think, how they operate, and how they can get things done. That becomes huge. Maybe you go in and you're a strategist and you just solve the bottlenecks, right? That's a huge way to add value to businesses. What else can you do to add value to businesses? Hire the right people. Hiring people is a skill. Finding people, talent acquisition, that's hard. How do you find a COO that can run a business? Like how could I find right now, I'm looking for someone. If you guys know anyone who wants to move to London and is decent with construction, understands property management, and wants to run my business, I would happily cut them in on profit. I'd profit share with them. To find someone that good, who's reliable, who's quality, send them my way, by the way. I'd love to interview that person. But finding people, that's a challenge. A lot of business owners go 10, 20 years, they're running their business for a long time, and they can't find a replacement. They can't find a COO who's got a chief of operations, who's going to run the business the same way they could, or even 80% as well as they could. That's all you can ask, is 70 to 80% as well. But if you can find someone who's 90% or 100% as well as the owner operator, that's huge value add right there. Putting that person in play changes the valuation from, say, a 2 to 3 times income before interest, taxes, depreciation, and amortization. So basically the profit. From changing the business to selling at 2 to 3 times profit to selling at 5 times profit multiple, because the business is stabilized. An investor sees, I don't have to actively run this business. Therefore, the profit it's getting is worth twice as much to me. So a business making $1 million a year that has an owner operator running everything, and there's not a lot of systems in place. They got employees, but if the business owner stepped away for 1 month, the business would fall apart. Versus a business that has $1 million EBITDA, and the business owner can step away for a month to Florida and everything runs smoothly and it continues to grow. The first business is worth like 2 times earnings. So maybe it's worth a couple $1 million because he's making $1 million a year in revenue, in profit, in EBITDA. The other business is worth $5 million. The same profit, the same revenue, but one is stabilized. The other is not stabilized. So I like to buy unstabilized businesses with owner operators who are ready to retire, who are tired, who do things wrong, and stabilize that business. So that's a big way to add value. It's always easier to go in from the outside though and stabilize the business because people can't see, like when you're in the business, you can't see how to work on the business because you're working in the business. So that's the challenge for the business owner watching this or the entrepreneur is how do you elevate to working on the business instead of in the business? That's a big place to add value. Hiring, managing people, high-level accounting can be really good. Doing high-level audits on your business can add a ton of value. And of course, this is the number one, I say the best for last, sales. Everything is selling. If you don't know how to sell, learn to sell. I'm not saying I know how to sell better than anyone else. My strategy and approach to selling is very educational. I like to provide the facts and let people make the decision for themselves. It's the reason I can't sell crap. If I can't believe in something and the numbers don't make sense, I don't want to sell it. There are people who can sell snake oil to or water to fish, as they say. That's not me. My approach is very less emotional than it needs to be, more factual, but a good salesperson or even a person who can develop relationships. A lot of businesses are business to business. And so you might have to go out to lunch or go on a few trips to get major clients. You might land a client that'll do 10 million in revenue over a phone call. Those are the type of businesses I love, business to business sales, where it's all about developing and cultivating relationships. So that relationship cultivator type of person, that person does very, very well in growing sales in a business. If you can grow sales, that's it. That's the number one thing you can do. Go into a business and double their sales. That's how you flip a business. That's my tangent. Hopefully that adds some value for you. Future Wiz says, do you have Jewish blood in you? Yes. Yes, long lost Jewish blood in me. I do. I'm like 1/16th or something. Very, very far out. I think the Rosehart name is from Germany. And so I think they might have fled pre-World War II. There's some distant Jew there, probably in me. I don't know. I'm not a practicing Jew, so.
Really far away Jew.
Maybe I should find my faith, you know? There's something to be said about that. I was raised Catholic though, so. Okay, next question. Crypto cheese. I want to buy a great cash flowing 3-unit building. It's a great deal, but my friends have told me it's on a street known for drug dealing. Would this scare you away from the deal? Cheers, Mike. Cheers, Crypto. Thanks for the question. I appreciate that a lot. Would it scare me away? Nothing scares me anymore the way that it used to. Seriously, I would buy anything for the right price. On the worst street, whatever. But you got to get a good price on it. Is the neighborhood gentrifying? Is there something you could do to change the neighborhood? Go and pick the 3 houses on that street that are terrible. Can you buy those 3 houses? Contact that landlord and evict those tenants on the grounds of drug dealing. Drug dealing is if they're dealing drugs and you can prove it, you can evict them for paraphernalia and breaking the law. So that's really easy, actually. It's actually really easy to evict drug dealing tenants. What's hard is the tenant that pays on time and smokes in the unit and is really annoying. That's the hard tenant to evict. But yeah, there's nothing wrong with buying that. Make sure it cash flows really, really well. That also is predicated on the fact that you're going to buy at a good price. So if you can buy at a good price, there's nothing wrong with that. You're gonna have to factor in that maybe you're gonna have some harder dealings. Like managing that property is going to be 3 to 4 times harder than managing an A-class property. I know, we've got some C and D-class properties. It sucks managing it. They suck my time way more than properties that do not, right? So anyway, just like in buying a business, talking about stabilizing, the same thing is true in real estate. I'll buy properties that are very distressed, bad tenants, and I'll stabilize that asset. I'll fix it up so the utilities are on point, there's no more leaks, get the utilities way down, get good tenants there paying top dollar. Then the real estate asset is stabilized. It's way more valuable than an unstabilized asset that's not cash flowing. So just the process of stabilizing an asset, maybe with no renovation at all. Often it involves renovation, but maybe no renovation at all. You can add a ton of value by stabilizing an asset, making it something an investor would be comfortable getting behind. Maybe right now it's like a drug house, and that's not something an investor is comfortable with. Therefore, you get a significant discount to deal with that problem. Problems equal opportunities equal profit. So problems, people see as problems. I see problems as opportunities, right? Wherever there's a problem, there's an opportunity. Wherever there's an opportunity, there's money. So there you go. I can smell the money in that one. It's going to be a lot of work for you. It's going to suck, whoever has to manage that. But yes, I wouldn't shy away from it just because of the fact that it's a bad area. Just make sure you have a significant discount to account for the fact that it's in a bad neighborhood. You want to buy way less than most other properties in that neighborhood, ideally. Kelly says, how do you feel about renting out timeshares like Disney? Don't get tricked into it. I went to Disney and Disney downtown, and there was a booth at Disney downtown in Orlando about 2 years ago where they were giving away like free trips to check out these timeshares at Disney. My overall, and I don't know a ton about them, but the one session I sat through seemed to me that these timeshares are not very flexible. You're often locked in and have little control over your investment, and it's often pitched as a lot better than it is. I wouldn't touch timeshares, to be honest with you. They don't have great resale value. People almost never use them as much as they think that they will. And the return's almost never what you think it will be. There's like no appreciation, no cash flow really. I don't know. I'm not a big fan of timeshares. You're not really owning anything tangible. It's like, it's an option to use a property. Crypto Cheese, financial investor, says, have you walked the neighborhood? What's your own personal feel for the neighborhood? Yeah, things like that as well. It might be identified as a, very bad neighborhood, but go there for yourself and fact check that. Maybe it's a bad neighborhood, but you're walking there and you're like, you know what? Neighbor's fixing up his house. Guy over there is fixing up the house. This area is being transformed. There's renovation work going on here. Maybe it's being gentrified. Maybe you see across the street a really nice neighborhood. That's a sign. Usually the nice neighborhoods spill into the bad neighborhoods eventually. There's like spillover. So you want to buy just on the outlier of basically where the good neighborhoods are, in my opinion. At what point do you hire contractors versus do things yourself? Tom Craig, at the point at which you begin to value your time. At the point at which your time has value. You may value your time, but your time might not be valuable. When I was starting in real estate, I was making $20 an hour at a full-time job in consulting. Actually, no, when I was 19, I was a student. When I was a student, I made $18 an hour at working in a booth at Canada Border Services Agency, inspecting goods that came across the border from the US to Canada. And my time was not very valuable. So the prospect of making $30 an hour was really enticing. I'm like, what? I can get a job where I call my own hours and I'm my own boss and I make $30 an hour? That's amazing. Landlording, sign me up, right? So there was a time where that made a lot of sense to me. Today, I can get on a coaching call at $100 an hour. So it makes no sense for me to go do a plumbing leak or fix things myself. It depends what you do, what your time goes. If you make 150 grand a year at a day job, it's probably not worth your time to renovate your own property. Probably better to outsource it. That said, I think the beginning of the journey, it's very important to get that knowledge. Before you can manage the trades well, you have to understand how the trades work. So work with the trades, learn how basic plumbing works, framing, electrical, learn the overall process, write it all down so you understand how a house is built from start to finish, 0 to 100. That's really important. That'll make sure that you can manage your trades well. At that point, you decide to hire it out. At the point at which you have cash flow to do it, at the point at which you value your time, even if your time is really valuable and you have no money, you might have to renovate your property. Just know that to do it yourself and take 6 months is way more expensive than hiring it out for $10,000 more and doing it in 1 month. I found out the time value of my money When I was renovating it myself, my projects would take 3 to 6 months because I was there every day trying to get the work done. Versus getting contractors in there and blasting it out 1 month, you get 5 extra months of rent. So often doing it yourself costs you more than just the labor savings. Like you're getting the labor savings, but you're losing all the opportunity cost of that rent you could have made during that time, all that profit you could have made. What was your time worth? I don't know why it keeps turning off like that.
Not quite sure what's going on here.
It's back on, and the thing's back on.
Did
You guys are gonna have to deal with this for the next like 10 minutes. I don't care about this box. I'm not gonna try and fix that. All right, there, I fixed it. Is it still live?
Yeah, it's still live.
No, it's paused.
Is it?
Yep. How do I clicked on this and I paused it. Can someone see me?
No, it's live.
Is it? They can still see me?
Yep. I don't know why it keeps doing that.
I think the camera's on a setting where it keeps shutting off every 30 minutes. We'll have to look into that after the show. Okay, let's see. Let's bash through these questions here. Financial advisor H Metal Mosh says, well, what if I want to be location independent and I don't want to check on the properties? So you have 2 options. You either hire a property manager company, 3 options. You hire a property management company to manage your investment, Metal Mosh, and you do nothing. You can travel and be free, and that's what I'm going to be doing. Basically, I have a company that manages all my properties and my investors' properties. So when we get the systems and pieces in place, we can all step away and have a good time. That's the idea, right? The second option is to partner with an active partner. So you go, whatever percentage, maybe 50-50, where someone's going to do all the work, the active partner, and they do all of the work. That might be an option. You don't need property management, you got a partner. The third option is basically you lend to people who do that. I'm trying to think if there's another option really other than that. That's all I can think of at the top of my head to make it really passive. If you want to get investing in real estate, it might just make sense to not own real estate as well. That's another option. So, but you can own real estate and be independent of the location. That's totally possible. Financial investor says, investor, not an advisor. There you go. So I'm happy to answer the question as well. Frank Downey says, do you think this was a good deal? Probably gonna screw up my live stream, but I'll click on it. Always the Windsor properties. 541 Bridge, 109,000. 4-bed, 1 bath, seems decent. Nice little house. The rooms are really small. It looks like it's dated. Yeah, it's all right. 4-bedroom house right across from the language center, walking distance to the university, currently rented at $1,620 a month plus internet. Those numbers are great. You'll have lots of cash flow. Nothing wrong with that deal at all. As far as Windsor standards go, seems like a pretty average Windsor deal. But yeah, seems great. I would jump on that. If I was in Windsor, why not? Seems like a good little first property. Maybe you can add a washroom to it. It'd be a 4-bed, 2-bath. That'd be ideal. Usually more than 3 beds, you want a second washroom or at least a half washroom. 1 washroom for 4 beds is a lot. Hey, doesn't seem too bad to me. That seems like a great rent for what it is. Okay, next question. What's the difference? So the difference between an advisor and an investor? So an investor is focused on what they're going to be investing in themselves, or as an advisor is trying to help other people invest. Yep, financial investors got it right. You can hire a PM if you don't want to check on the properties yourself. That's exactly right. They communicate well with you and don't let issues back up. Yeah, exactly. So if they're on it, if they're on point, that's important. You got to see what's valuable for you. Is communication valuable? I know for myself, I don't want the property manager to call me. And that's the major issue. There's a workflow and they can fix the issue. Don't tell me what the problem. I don't want to know. Like, my body has enough to deal with. The last thing I need my brain to be working on is how to fix a problem more efficiently than a manager. So just don't tell me. That's what I would prefer, is lack of communication actually in my manager. I want them just to fix it and know how to fix it well and do it as cost effectively as possible, but send me a bill in like 2 months. I don't want to know about it. Because if I'm having to hear from the manager all the problems, it's as if I'm managing it myself and then they're just a middleman. So I actually think effective communication between a lot of communication between a manager and an investor is a bad property manager. A bad investor is always like obsessed with their property. A good investor steps back and focuses on the high value places they can basically spend their time on, in my opinion. That's just my opinion. Maybe it's because I don't want my investors to call me all the time. Maybe it's because when I had a property manager, they did call me all the time. And I was basically just managing the manager, and that was a waste of time. I felt so there was a point I didn't even need a manager because I was literally like microing them every single day. And I think you should just let them have autonomy and let them do their thing. That's been like, when I'm looking for a manager, that's really important. Of course, in the beginning, you gotta make sure they're doing it properly, but once you got that trust, let them do it. Investor is just any individual who buys stocks, and an advisor advises on others on what stocks they should be buying for their investment goals. Yeah, pretty much. That's about right. Future Wiz says, I'm the opposite, Mike. I'm a lazy F, and my desire for fire comes from me not wanting to work and just stay home playing video games, beat off the hentai F hookers, and eat good food all day. Future Wiz, that's, love it. Not my cup of tea. I love the gaming. I'm big on that. I'm also relatively lazy at heart, but how I grew up in such a way that I had this fire in me because I had to struggle to get where I am today. And so that helps me stay motivated and helps me work hard. My nature is lazy. So if I grind for a long time, I get burnout. I prefer to be lazy. The nice thing about lazy investors and lazy people in general is they often find better ways to do things. They find more efficient systems because they're lazy. The grinder will just keep doing it the less efficient way because they're just a grinder. It's just their way. So I actually prefer the lazy investor. That's the beautiful thing about FIRE. I go back and forth on that. It's like, I'm at a point now where I could easily have a couple $100,000 in passive income and never work again another day in my life. But for me, I need something that keeps me actively stimulated in my brain. I would like to do none of the grunt work. Like, I absolutely hate bookkeeping and administrative work. I'm so ready for administrative assistant. We're actually bringing one of the mentees on to do exactly that, but we're going to get there. In the beginning of a business, unfortunately, there's a lot of grinding. It sucks. It's just the nature of it. I wish I could tell you that the quick path to FIRE was an easy one. It's not. There's a lot of grinding. But if you're willing to delay gratification and say, okay, I will suffer, at this much or maybe this much so that in 5-10 years I can have zero suffering, right? The amount of suffering you do now compounds the amount compounds the amount of enjoyment you get later. So the amount of suffering now compounds the amount of enjoyment you get later. Something to think about. You can eventually have that life. When you get to like the stage where I'm at, I could just do that all day long if I wanted to. That's the beauty, is that if things go south, I'm okay. That's what's given me confidence to kind of be a part of this. Tommy Imina, 50th show, glad to be part of it. Hey, good to see you on. One of the number one supporters. It was great meeting you, Rec. Metal Mosh says, oh, okay. Rashab's message retracted. Not sure what the message was. Okay, so the people in stocks say do stocks, but people in real estate say do real estate. Metal Mosh, so here's the thing. I do both. So I'm a stock investor. I'm also a real estate investor. The argument is do whatever you have a competitive edge in that you enjoy. If you have a competitive edge in stock trading, not many people actually have competitive edges in stock trading, to be honest with you. Over like a 25-year period, there are not many. Most professional fund managers who run mutual funds, I'm saying like expert traders, over a 25-year period don't beat the index. The index has been performing really well. Money's been doubling every like 3 years, the last few years. The S&P 500 has been very strong. A lot of the high growth plays have been doing very, very well. And so it's hard to lose money. In a down market, it's a different story. People do tend to lose a lot more money, right? So there are traders who will make money over a 7-year period, 10-year period. But talk to the veterans who have been doing this for like 15 years. And what you'll find is they almost always end up with a return that is close to the S&P 500, which is about your money doubling every 7 years. Unless they're leverage trading, in which case they have a huge chance of losing everything, but could get a higher return. What I said, go back to the clip I said earlier in the video, that real estate, it has the lowest risk to return of any investment vehicle that exists on the face of this planet. Unless you're an insider trader or you have some sort of advantage that no one else has. That's it. Real estate has the lowest risk to return. It's hard to lose money in real estate. It's really easy to insider trade in real estate. You can't insider trade in the stock market. That's the advantage. I love stocks, by the way. Like, my end-to-end game is a huge stock portfolio where I'm actively trading and having fun because I enjoy it. Not because it's a better return. I know for a fact it's not a better return than real estate, but I might enjoy it more. It might be more passive, right? It might be more diversified than owning just Canadian real estate, right? So diversity is really important. Diversity ensures that when a sector goes down or an area gets trashed, your portfolio is okay because you're not just relying on real estate. So probably do both. It's probably a good sense to do both. There is an argument for doubling down on one thing until you get mastery. So I think until you hit a point where you got competitive edge, do that one thing with a lot of intensity. Don't spread yourself too thin. But I think long term, you should have all the asset classes. Like, it makes sense to invest in stocks just as it does bonds, just as it does real estate. I prefer to sub out my bonds for real estate. Like a good portfolio has, like, in my opinion, if you're young, 85% equities, so like stocks, and 15% bonds. Or I've seen 60% equities, 40% bonds for a more conservative portfolio. I substitute my bonds for real estate. They operate in much the same way, have a similar type of consistent cash flow and a similar risk profile, in my opinion, if you're investing in real estate in a stabilized nation like Canada or United States. There's less, like Canada's a very stabilized nation. If you're investing in real estate in like Costa Rica or like Venezuela is a totally different situation, right? Like that's a high risk investment in my opinion. I'm talking about stabilized, developed nation real estate that has a long-term financial future. That's right.
At best.
I'm no financial expert, but stocks seem to have crap returns compared to real estate. That's not necessarily true. Real estate by itself performs around the same as the S&P 500. The reason real estate performs better, like I talk about, is the 5-to-1 leverage. I can go borrow at 3% and buy 500% for every dollar I invest. So a dollar buys me a dollar in stock buys me maybe $2 in stock if I'm margin trading. But typically you buy a dollar stock, you get a dollar of stock. You put $1 in real estate as a down payment, you get $5 ownership in real estate. I put $100,000 in real estate, I buy a $500,000 property. I put $200,000 in real estate, I buy $1 million in real estate. I'm controlling $1 million asset that's growing at say 7%. Where my cost of debt is 3%, I get the difference between my asset return and my cost of debt multiplied 5-to-1. So if I'm growing at 3% and my asset's returning 10%, I get that 7% spread 5-to-1. So 35% return on my money just because the cost of debt is lower than the return from the asset. If you're borrowing on against stocks at 7% and their stock is returning 8%, your spread is very small on the borrowing and it's not as attractive to do that sort of margin trading. My thoughts. Yeah, I'm a business grad and I love stocks. I love real estate. I love it all. I just think there's an edge in real estate for most people. When you get to the multi-million stage, you can buy businesses and get really high returns with lower risk because you're in control. And that's the beauty about real estate is you're in control. With stocks, you're not necessarily in control. You are making educated bets, educated gambling on the performance of other people, on managers who run the company, on the sales staff, on the product. You're betting on things. In real estate, I bet on my ability to renovate the property through to completion and rent it out. I am very confident in that bet versus I'm not as confident in whether or not the CEO wakes up tomorrow and doesn't have a heart attack. That's a risk you can't control, right? I can control a lot of things better in real estate than I can in stocks. Just my thoughts. Trying to be unbiased as I can here. I happen to have a lot of success with real estate and with stocks, but I've had obviously more success with real estate because I just doubled down on that and made millions doing that. Not necessarily anything better or worse. I would like to start a bit of this channel, like a piece of this channel where we talk about stock returns too. I think there's a ton of value in that, but I'm a boglehead at the end of the day, guys. I believe that you should do a set it and forget it stock portfolio. There is no easy get rich quick scheme with stock investing. It just doesn't exist without a lot of risk. For every guy that, is a, stock trader that does really, really well, there's 99 that fail. Do you ever see yourself buying an exotic car? Tiger Rocks, good question. Yes. It will probably happen when it's a small enough percentage of my net worth. What the Toyota Corolla is to the average person, when the exotic car is like the Toyota Corolla to my net worth, that's when it might make sense. So for instance, the average person has like a few $100,000 net worth. They buy a $10,000 car. If I had $100 million net worth, I'd buy an exotic car because it'd be the same as me going out and like getting a used Honda Civic. That would sort of make sense. But I'd buy a used exotic car probably. I'm really eyeing up the Tesla for the self-driving. If my mentees didn't drive me around in London and allow me to text, like, I get to be driven around a lot, so that makes it less appealing. If I was driving myself all the time,
That's we're driving around in case you have to drive me around because
Well,
I'm filming your face.
yeah, like lately I've been having to drive because Kyle's been filming. We do some videos in the car, and some videos coming up, by the way, on like actual real estate investing in the field again, which I think will be great. I want to do more of that on the other channel and focus on this channel about those really, really refined videos. This weekend, Gabe, if you guys check out his channel, Gabe Bolt's going to come over and we're going to do some videos. So that'll be really exciting. He does some really good quality work. I like his channel a lot, more of a similar size channel. So that'll be a cool collab. But yeah, overall, do I want to get an exotic car? Yes. Is it frugal? No, not until you have such a net worth that it makes sense. Such an income that it makes sense.
A 1974 Dodge
I don't want an old car.
Challenger.
No. See, like the appealing thing of a muscle car is like, yeah, it's cool, but like they stink. They have no advanced technology features. My next car is going to drive itself.
Fair enough.
I mean, that doesn't necessarily mean a Tesla because I think in 5-10 years, all the cars are going to be self-driving.
Yeah.
But that's just what I'm betting on. I'm going to wait until the exotic cars can drive themselves. Stocks are great and can offer great returns, but how it's hit or miss. You can invest in a great company and a CEO can turn and burn in flames. Stocks can outperform. Example, Amazon beats real estate. Yeah, so the risk to reward profile, right? The risk in stock trading is very, very high. The returns can also be very, very high. I don't know. Yeah, so I mean, over like the last 5 years, I think my real estate portfolio has outperformed Amazon, has outperformed pretty much any blue chip mid-sized company. But I'm getting hundreds of % return because I'm buying under market and I'm leveraging. You can't leverage with Amazon the same way. So that's, yeah, I mean, you're right. There are people in stock investing who have done very, very well, but they've taken extreme risk and been extremely lucky. I like to take the luck out of the equation. I like to assume the real estate market's going to be probably pretty flat. It won't be. It'll probably be like 3% every year, up, but very boring. I like to play the boring game than play the risk game. The feeling of loss is so painful. To lose $1,000 in stock investing hurt me so much. It just hurts me a lot. So I can't have a lot of my net worth in stock trading. It's just too much for my risk tolerance. With real estate, I can make bets that I can write checks. I know I can cash. I know I can get the work done. There's a simple path I just got to follow. I'm in control. That's what I like about real estate investing. Why don't you lease a nice car? It's an option.
The other thought I have on the stock thing, just to throw in a thought here, is that
Yeah.
Amazon might not last forever, right? Because how many companies
possible.
in the legacy, in the past were
Well,
really, really big
most companies last a
and,
long
like,
time.
disappeared?
Like there's companies like IBM have been around like 100 years.
Yeah, but then
Coca-Cola, 100 and something
like
years.
Nortel, right?
True. Yeah.
Companies just completely tanked.
Exactly. The risk
And then they're gone.
the risk is much, much higher. So for the exact point I make, the risk to reward profile of real estate is much, much different. With
Yeah, it's unlikely that a company.
the risk is very high. No, it is high. That the company could crash tomorrow 20% or 50%, or
Even the biggest one.
or go to zero, right?
Yeah.
You gotta
So that's just passing thought in my mind.
100%. Yeah, it's exactly. He's echoing exactly what I just said. Exactly that. It is way higher risk for the return you get. The return can be very good. Like the risk to reward chart looks like this, guys. You guys can't probably even see that. Ah, never mind. There's a risk to reward chart. Basically, like if you looked at a matrix, I think real estate is an outlier in that the risk is very, very low and the return is very, very high if you're buying for cash flow. So that's what it is. I don't want to harp this point too much. I'll move on to the next question because we got to get going. It's 8:20 already. Okay. Why don't you lease a nice car? It's just for me not in the cards right now. It's an expense that doesn't add any value to my life. Maybe in the future it'll make sense. I can write it off under the business. Right now I just don't have a need. My car, my gold Ford Focus is awesome. It looks nice. It drives well. It's very reliable and safe. I have no need. With our next baby on the way, very, very soon, and having a big enough family where I have some people, maybe some friends go with me too, we might need a van. Might make more sense to get a van or an SUV. One that's very fuel efficient, obviously, but it makes sense to eventually make the conversion and the change. Right now, I don't have a need. So other than like it's flashy and nice.
What, I mean, no Ford F-350?
No, definitely not. Contractors have trucks. I don't need trucks. Cash flow is where it's at. Future Way is exactly right.
One of 350s.
I don't even want a truck, man.
I have a tough time justifying a 350 to anyone. It's literally just a dick waving contest.
I have no interest in like an F-350. You've got to be.
It's so
It can make sense if your job, like for business purposes, if you actually haul like heavy materials or like
you're hauling concrete,
concrete or
then an F-350.
Probably it's just for like towing a trailer with trucks on it, like other like
Yeah.
heavy machinery, stuff like that, where I can get where it makes sense. So real estate gives you cash flow, like dividends, appreciation, capital gains. It gives you business write-offs, yep. Real estate depreciation, yep. Ability to grow and scale and learn, plus private funding to grow. Yeah, I mean, you can get private funding to grow, that's true. You can also get public, you know, a lot of basically, I consider A-lenders like public money almost basically too. Why not invest in company stock that's been around for a long time? You can, Metal Mosh. Totally, it's called blue chip. So you buy blue chip companies that have been around for 100 years. They'll probably be around for 100 years longer, like Coca-Cola and a bunch of other stable blue chip stocks. Lower risk, lower return. Your return on investment will be much, much lower as a percentage than you would be investing in real estate, for instance. Downside to real estate, you need good credit and more capital. Future way is not necessarily always true. Good credit and more capital are beneficial, but you can still invest in real estate without doing that. The barriers to entry in real estate are overall higher, but you can get into the industry with less than you might think, especially if you can build a brand around it. But yeah, I do agree. The barriers to entry are a little bit higher with real estate than they are with a stock, right? Anyone can buy like $10 stock and open a trading account. I also believe, though, anyone can buy crowd-funded real estate or real estate investment trusts, REITs. So you can invest in real estate. There are tons of real estate stock tickers, REITs, that trade on the public exchanges. So you can own a bunch of properties and have a company, they'll pay you 8% dividend. They'll basically pay out the rental income. They take a management fee. And you get the appreciation upside, all of that. And they'll take your money and lever it up like, because they're on an exchange and there's certain regulation requirements, they can't lever up 5 to 1. They can lever up like 2 to 1 or 3 to 1, hence the lower returns, but it's still investing in real estate somewhat levered. It's like owning a property with 50% down payment or 40% down payment. Not as efficient, but still an option. So I'm a big fan of the real estate investing trust. It's probably the compromise between stock investing and real estate investing, right? It's the passive option, set it and forget it. It's something I'll probably eventually have in my portfolio as well. It was in my long-term plan. Real estate seems so confusing. I will learn though. Yeah, I mean, it's really actually quite dead simple. You just buy a property, you rent it out. Everything else you kind of figure it as you go. Financial investor says stocks are a great way to save and build wealth, and you can move those funds into real estate. 100K with 20% down can be 20K into 5 different properties. That's right. And the same, I think the schedule of evolution should be, you know, stock investing to start. So you buy some exchange traded funds or whatever you buy, something safe, buy the index like the S&P 500, the Toronto Stock Exchange. Maybe buy some REITs, because REITs have low barriers to entry. You can put a couple $100 in a real estate investment trust, basically a company that buys real estate for you. So you buy that and you get like your 8% return. Then you save up enough to buy property, you grow your net worth huge, and then you cash out most of your real estate portfolio, or you hand it off to someone else to run, and then you put it back into stocks. And because you have so much net worth now, you can put it into stocks and they provide enough passive income that you can basically live off the dividends. That was my play. That was my plan when I started, was to buy, build it up, sell it, and then put it all into stocks and just relax, have a passive investing strategy. So there you go. There's many paths, but that's one. Yeah, returns are way higher in real estate. Yep, true. If you buy, rehab, rent, refinance, and make 20K in equity out of every buy, you turn your 100K into 200K plus cash flow, 1K per month. Very true, financial advisor. All good points. Shabazz says, should I invest in commercial or residential in Alberta? I'm a big fan of residential over commercial for a number of reasons. It's harder to develop an edge in commercial, and the returns are lower on average as a percentage in commercial, but there are tons of development plays you can make if you have big pockets in commercial. I'm a big fan of residential. Commercial is easier to manage, lower returns. Metal Mosh says, okay, so it's better to save and invest money in stocks than go into real estate. That's one option. You can literally buy real estate on the stock market though. So that's one thing, like they're called REITs. So just to note, if you wanted to go that route, feel more consistent and safe.
Buy a REIT, the house will be in the mail in a week.
Well, basically you get checks every month, right? They pay distribution checks of like 8%. So if you had 100 grand rested in a REIT, you'd get like $8,000 a year, but paid monthly or quarterly or whatever. It's pretty interesting.
Pretty sweet.
I really just want to invest in stocks and real estate to help me retire early. There you go. I'd say it's a good path to see people who do wholesaling, but ethical wholesaling seems hard to find. Yeah, it's kind of tricky, right? How far do you take the customer? How much value are you providing? You know, when you help them move out of the place and find a new place to live, how much value did you provide? Is it $10,000, $20,000 discount? I feel like you're not taking them for a ride if you're doing $15,000 discount and you're helping them find a new place to live and help them clean up their house and maybe giving them a quick close. You've given them enough value to justify the drop in price and feel ethical and good about it. Everyone should watch Ben Felix's latest video about the buy versus rent decision. He boils it down to comparing uncovered costs of both options as the best way to get a like-to-like comparison. Yeah, I've done a similar thing myself on pen and paper. I think I did a video about it a long time ago about rent versus buy. You can check that video out too. I'm probably not as concise or as well as Ben Felix's video, but or whatever Black Felix's video. Oh, sorry, you're talking about my screen being black. Okay, so Ben Felix. Gotcha. Okay, I don't even know who that is, but I'll go check it out. Camera's off. We fix that. CBC is also known for being a stricter lender. They didn't used to be. They used to be very generous. They had a net worth lending program where if you're rich, you got mortgages no matter what. Just show like 150,000 in cash in your account. That program's now gone, but I used to snapshot 150,000 cash and have like 50K for the down payment, and I would get instantly qualified. Even if my debt income ratios didn't matter, nothing. Scotiabank has a new program that does the same sort of thing. I'm really excited about it. So we can start getting mortgages again, just snapshotting a lot of cash. They show every dollar above, I think, 250,000 as a dollar of income. So you just snapshot $1 million in your account, and boom, you can go borrow like you have 700K in income, which is really cool. Take advantage of that program before it's gone. Okay, true. S&P average 7-10%, but most individuals are fearful and sell at lows and buy at highs instead of setting a scheduled plan and sticking to it. Yeah, so you need to look away from your portfolio. Your greatest enemy in stock trading is you, the investor rationale. That's the problem. They average 2 to 4% versus market of 7 to 10% because they can't handle the volatility. Very, very true as well. Keith, just getting on due to kid with broken arm, trying to have a shower. When investing in TFSA and RSP, what ETFs should I include to not get penalized in taxes? So with your tax-free savings account, it doesn't matter what you invest in because it's all tax-free. That means then that you should invest in the highest taxed type of investments. So interest-bearing debt is the highest. Capital gains taxed stuff, so when you sell and get a capital gain, that's the lowest. Dividends, Canadian eligible dividends, paid from companies. Dividends are paid out of the profit, right? A dividend is basically just the company sharing some profit with the investor. So a dividend payout is taxed very well in Canada. If your income is below like 50K, if your income is zero, you can take 50K in dividends per year tax-free because the dividend gross up credit you get. So you don't want to get dividends in your tax-free savings account. Doesn't make sense. Hold dividend-bearing stocks outside of your TFSA. You want to hold interest-bearing stuff like REITs that pay distributions that's treated like interest, or you want to lend at your tax-free savings account because you can get 25% return and then basically take all of that and invest it in your TFSA tax-free and reinvest that compounded growth tax-free. So interest-bearing debt, TFSA, RSP, interest-bearing debt ideally as well, because you can delay that tax until you take it out sometime in the future when you take money out of your RSP, which is whenever you want, no age restriction. You can take your retirement savings, register retirement savings plan, you take the money out whenever you want. I can withdraw from my RSP today if I want in a low tax year. I'm in a high tax year, so it makes no sense right now, but just hypothetically you could do that. Yeah, so Keith, good question overall. Hold your dividend stuff outside of in your open accounts that are not tax preferred. Hold your capital gains type stuff, the stocks you want to sell for a capital gain down the road. Capital gain is the idea that basically your stock appreciates, you sell it, you have a gain. That's called a capital gain. It's taxed at a quarter tax. It's half inclusion, and if you're at the max tax bracket, it's half of a half, so it's a quarter. If you're at a quarter tax bracket, if your tax bracket is 25%, it's half of a quarter. So it's 12% tax. Capital gains is very preferentially taxed. That's why when you sell real estate or sell stocks, you get a really good tax treatment. Rental income, interest income, all that stuff is taxed very poorly. So you want to have all that in your TFSA and your RSP. Angie asks, how much do tax complications weigh in on your business plan for real estate? You shouldn't let the tax tail wag the dog, but you should still factor in tax treatment in your overall plan. So I factor it in, but I don't let it make the decision for me, if that makes sense. You don't worry about it at first, but after you start buying a few, work with a CPA to tax prep and maximize. Yeah, I mean, I have a tax, so I don't, but I should start working with an accountant. If you run a real estate business, always get a CPA who understands real estate. They can help you know how much you need to buy and repair in order to deduct and write off as much as you can. Yeah, tax planning is more important than the actual tax return, in my opinion. You need to be doing things throughout the year that line you up really well for that tax year. For instance, selling properties strategically, or buying properties strategically, or renovating within certain tax years strategically, and buying materials in certain tax years strategically, or selling stock and tax loss harvesting in certain years strategically. I have no question. Just want to say hi. Hey, Border Hopper. If you guys do me a favor and jump on the channel, hit the subscribe button and the notification bell, we'll see you next week on the new channel. You're pumping me out, Mike. My edge will be plumbing problems. There you go. Tagger's got the plumbing on lockdown. Snake Eyes 11, how do you get your cheap renos? Do you buy the materials? Yes, I buy materials. I go and I use apps like Flip to buy cheap materials from Rona, Home Depot, and Lowe's. I know, I'm hurrying. Emma's having a freak out. I gotta go. Yeah, I'm hurrying. I gotta go. Cal just jumped to the moon when Elise banged on the door there. Emma's having a tantrum right now. She's screaming upstairs. You probably hear her screaming. So I gotta probably, oh, the screen's black anyway. I gotta finish up these questions on rapid fire. Like, how fast can I do these? Whoa, there's a whole grid on the screen right now. How do I fix that? Yeah, I did it the same way as last time.
I don't know why it's doing that. I'll take a look at
Can you guys see me?
Yeah, you're good.
My screen frozen still?
Nope, you're good.
Rapid fire, like so fast. I can't even get through all these questions. We should save some of these and paste them next time. Okay, can you explain the break-even ratio banks use when lending to you? Total debt service. It is frozen, isn't it? I thought it was.
Unminimize that. Yeah, just don't minimize it. Don't minimize it.
Okay.
And then just
Oh, there we go.
Yeah, if it minimizes it.
Doesn't like that. Okay. How do you get cheap reno? So there's total debt service ratios, things like that. They use income to what you're borrowing. That's how it works. I've explained it before, but I'll explain it in a future video. It's not about keeping it cheap. It's about correctly estimating the repairs needed and the cost. Make sure you price that into your buy price. Exactly right. You're speaking my language of bookkeeping automation. I work for XN Accounting, and that's the core of what we do. Amazing. We should send me a private message on Instagram. We should have a chat. Eric, how's it going? Good to see you on. Mike, do you have Jewish blood? Let me answer that question. What's up, buddy? I'm going to catch the replay. Mad respect and likes. Thanks, Don. Really appreciate that. Aaron says, I see ya. I can see you, no box. G1 Mercury says it's all good. Are you asking questions from the chat? If so, how does one get over the fear of buying their first property? Yes, I ask questions from the chat. Just jump in the chat and drop a question. How do you get over the fear? You just do it. Do it. You just do it. As an investment or even a place to live for a bit and then rent it out. Yeah, it comes down to the more you research and study and learn, the more expertise and confidence you'll build. As you build your confidence, then you'll be more comfortable, there'll be less fear in doing it. But there's always a bit of fear, and you have to just take the leap and trust that it's going to work out. Run your numbers, talk to professionals, talk to guys like me who do this in real estate, talk to your real estate agent, talk to family, friends. They might be naysayers, so discount what the friends say and the family say, because they often will have negative opinions and they might dissuade you from doing something that's actually best for you. So just be careful. Glad to join. Good to see you on.
I did a post on Facebook the other day.
Andrew says hello. Hello. I like your thoughts on real estate versus stocks. Spot on. Thoughts on the current Bitcoin jump. You guys want to go on my blog and see what I think about Bitcoin? I feel the same about Bitcoin as I did then. I will not be touching Bitcoin. I have no interest in cryptocurrency because it doesn't generate any cash flow. There's no dividend paid. It is not a business. You're investing in an idea, in a currency. I'm not a currency trader. I have no interest in trying to predict future price of said hypothetical item that exists as a store of value only in the mind of the people. And so it therefore has no real intrinsic value at all. I'm gonna leave it at that. Go read my blog post. I wrote a really long blog post on my blog, 25andfree.com, a year ago when Bitcoin was at $20,000, and all my friends said it was going to $1 million, and I shared my thoughts then. I think it could be a small percentage of your portfolio. You could put a couple of percent of your net worth into it, have a little fun with a couple $1,000s. Maybe it does well, maybe it doesn't. Don't bet the farm. That's all I'm gonna say. Okay. Thoughts, first investment is always the hardest. True. Good thinking, best of both worlds. I lost my spot. There it is. Okay. Kyle sent another link. Says before the stream ends, remember to subscribe to the new channel and hit the notification bell so you can jump on the live stream next week, because all the streams are going over there. We're going to migrate all 50 over to that channel. So you want to be on that channel and get on the playlist. We're going to do some cool live streams at random as well. So there'll be some cool stuff when you jump over to that channel that you'll get as a result of that. And of course, the main channel every Saturday at noon will still upload a quality video, and I'll still see you in the comments on both. That's what my channel is. I do mainly stocks. Started real estate last year, and now I have 3 doors, should have 5 by the end of the year. There you go. So you can see the value in both stocks and real estate. Kyle's link to the renting versus buying a house video. You can click on that one. There's another video somewhere as well, I think. Christine says, thought if you cash out your RSP early, you have to pay 25% penalty. No, so the bank will do a withholding fee effectively when you cash out a retirement savings plan. They will take between 10, 15, 25%. I forget what the bank, they used to do 15% on the first up to a certain amount and then another percentage after that. They do that and they withhold that and they remit to the government so that they can keep some tax there, because most people take the money out of their RSP and spend it all. You have to realize that some of that money is pre-tax. You got to pay the tax on the money you're taking out of there. It's pre-tax money. So what happens is, let's say you had zero income in a tax year. Like, let's say next year I have no income from any source. I'm just unemployed loser. I can withdraw $12,000 from my RSP completely tax-free. Now, the bank might hold a bit of it as like a deposit, but the CRA will credit me back that, because at the end of the year, if you have $12,000, $11,000 in income, in Canada, you pay zero tax, none. First $12,000 per person in their relationship. So you're bringing $24,000 a year tax-free, $12,000 per couple, tax-free. So you can each withdraw $12,000 from your RSP, 100% tax-free. They'll hold the money as deposit, then you got to pay it back basically to them. So that's it. Yeah, so there is no actual penalty. There's just the tax you would have had to pay anyway. And if you're in a lower tax bracket when you withdraw, you're actually at an advantage versus what you would have been paying the tax when you put the money in. You put pre-tax money in, you got to gross up credit for that. When you take it out, you got to pay the tax on it because you already got a credit reimbursed to you when you put the money in. Do you think it's worthwhile to contribute to the RSP, or is it better to save and keep growing real estate portfolio and save unused contribution room for later years? Eric, I think it's best to contribute to your RSP in your highest tax years. So when you're earning the most you're ever going to earn, that's when it's time to contribute to your RSP. That said though, the best time is now, because the dollar value of that compounded tax deferral is more powerful now. So if you can save $1 now and pay $1 tax in 50 years, that's basically worth nothing. So if you could contribute now to your RSP, that's much better than contributing later. So I would say the best time to contribute is now, unless of course you're making like no money. If you're having if you're having a low income year, don't contribute to your RSP. If you have a high income year, contribute to your RSP. If you're having a medium income year, probably contribute to your RSP because the time value of that money is pretty good. If you get delayed to paying tax now and get a credit now, that's great for the long term. How much is realistically needed to start? What type of real estate do you recommend for a new investor? So Sean, the best place to start is investing. You could do private lending to people like me. You could lend like $10,000, $20,000. But the best place I think is, besides lending, because lending can be a bit risky, is buying REITs, real estate investment trusts. You can buy some really good REITs that own, for instance, just student properties in like London, Kitchener-Waterloo, Toronto. You can buy a whole aggregate of hundreds of properties in the buildings that they own and get an 8 to 10% safe return without having to manage anything. And so they lever your money up a little bit. It's better than a stock portfolio. You get to invest in real estate. Not better than a stock portfolio, different from a stock portfolio because you're investing in real estate in the form of a publicly traded stock that's ticking on the exchange. So look at some REITs. Okay, message retracted. I'm subscribed to the new channel. Thanks, Deez. Appreciate it. Anyone here from the States? There are a lot of subscribers based on the data that I see that are from the States that watch the channel. So probably a ton in there. Yeah. So anyway, thank you all for watching. Appreciate it so much. If you, at the end of this, just jump over to the new channel, click the link in the comment. It'll be pinned below to the new channel. Jump over there, hit the subscribe button and the notification bell, because you're not going to get notified when I go live if you don't hit that notification bell. So I promise to provide a lot of value for you guys if you'll just do that one thing for me. Let's see if we can get us a few hundred subscribers right now from this stream. Jump over to the channel. Let's see if we can get it done. You can also find the link on my Instagram, on my Facebook account. Go to those places. I'll see you next week, guys, on the new account, The Mike Rosehart Show. As always, the key to unlocking wealth through you is to spend less, earn more, and maximize those returns. That's what The Mike Rosehart Show is all about, specifically with the real estate investing focus, because it's my favorite vehicle for a number of reasons. It is the best vehicle. And I'll argue till I'm blue in the face on that. Risk to reward is, there is no safer bet for your money with that kind of return. There are safer places to put your money than real estate, but not with the level of return you can get from real estate. And I love that it cash flows. That's the biggest thing. Buy real estate, the cash flows. Don't speculatively invest in real estate. Thank you all. Logan, thank you for the comment. Appreciate it so much. All right, everyone. He has to go. Tom has to go. I have to go. Bath time. My daughter's freaking out. So this is what happens if you have a 3-year-old daughter who's sick. You got to go. So I've been here now till 8:41. We had a great stream. It was a long one, and I thank you so much all for tuning in. I'll see you in the comments this Saturday on my upload, and I'll see you next Wednesday on the new channel. Let's share it around. Bye, guys.